The headline promises that Canada just changed the global uranium game and that America is reacting. Before we accept either half of that sentence, it is worth slowing down, because what actually happened over the past several weeks is more interesting and considerably more complicated than a single dramatic turning point. There was no single announcement that flipped a switch. There was a strategy document, a set of financing decisions in Washington that happened to land in the same week, a uranium market that had already been gyrating for months on unrelated geopolitical shocks, and a longer-running Canadian debate about whether the country should stay a supplier of raw material or become something more. Put together, those threads do describe a real shift in how Canada is positioning itself in the nuclear fuel economy. But change the game oversells the speed of it, and America reacts implies a confrontation that, at least so far, the record does not support. Let's take this apart piece by piece. The proximate event is Canada's first ever national nuclear energy strategy, released on June 23, 2026 by the Federal Minister of Energy and Natural Resources, Tim Hodgson, through Natural Resources Canada. Hodgson framed it in stark terms on social media, calling it not simply an energy plan, but an industrial strategy, a pillar of national energy security, and an instrument of foreign policy. That is a lot of weight to put on a document, and part of the job here is to test whether the substance matches the rhetoric. The strategy is built around 4 pillars, enabling new nuclear construction across Canada, positioning the country as a global supplier and exporter of reactor technology, expanding uranium production and securing the nuclear fuel cycle, and pushing forward domestic nuclear innovation, including next-generation fission and fusion research. For a documentary about uranium specifically, the pillar that matters most is the third one, but you cannot understand it in isolation from the other 3, because the entire document is really about Canada trying to leverage a natural resource advantage it already has into an industrial and diplomatic advantage it does not yet fully have. Start with what Canada actually controls today. It is the world's second largest uranium producer behind Kazakhstan, and it holds the highest grade uranium deposits on the planet, concentrated in the Athabasca Basin in northern Saskatchewan. According to the government's own strategy document, Canada supplies roughly 90% of what it mines to export markets, and it is the only country capable of producing enough uranium to fully supply its own domestic reactor fleet without importing a pound. That last point matters because Canada's CANDU reactor design, the workhorse of its domestic nuclear system, runs on natural, unenriched uranium rather than the enriched fuel that most of the world's reactors require. That is a structural feature, not a policy choice, and it is central to understanding why the Canada changes the uranium game. Framing needs a caveat almost immediately. Canada's dominance is upstream, in mining and milling, not in the enrichment step that actually determines who controls the more strategically sensitive part of the fuel cycle. The new strategy sets specific dated targets rather than vague ambition. It commits to strengthening and securing fuel supply for Canada's own reactor fleet by 2032, doubling Canadian uranium exports over the decade to 2035, and supporting new mine production to come online by that same year. It also commits to reviewing Canada's uranium mining investment policy by 2027, which is bureaucratic language for a real question: how much foreign capital and from which countries should be allowed into a resource that is increasingly treated as strategic rather than merely commercial. On enrichment, the document is notably non-committal. It says Canada currently has no domestic requirement for enrichment services because CANDU doesn't need it, but that the growing rollout of small modular reactors and possibly conventional light water reactors will eventually create what the strategy calls a modest need for enriched fuel. Rather than announcing a plan to build enrichment capacity, the strategy explicitly leaves that as an open question, stating that the case for domestic enrichment would strengthen if Canada's non-CANDU reactor fleet expands considerably, and that in the meantime, Ottawa intends to meet any enrichment need through partnerships with trusted allies. That is a country hedging, not a country making a bold unilateral move into a new part of the supply chain. It's worth flagging that distinction clearly, because much of the recent commentary conflates Canada's mining leadership with enrichment leadership, and the government's own document does not make that claim. So why does the timing feel so charged? Because the geopolitical backdrop against which this strategy landed has genuinely shifted, and that shift predates the strategy by several years. Russia's full-scale invasion of Ukraine in 2022 triggered a slow-motion reorganization of Western uranium supply chains that has been building since. Data compiled by the Oregon Group's Critical Minerals Research shows that Russia's share of natural uranium delivered to European Union utilities fell from roughly 23.8% in 2023 to about 15.6% in 2024, while Canada's share rose to nearly 34%, making it the single largest supplier to the EU. On the American side, the shift has been legislated rather than left to the market. In May 2024, President Biden signed the Prohibiting Russian Uranium Imports Act into law, banning imports of Russian low-enriched uranium into the United States as of August 11, 2024, with a waiver process administered by the Department of Energy that is set to terminate entirely by January 1, 2028. Historically, Russia supplied close to a quarter of the enriched uranium used to fuel America's commercial reactor fleet, according to figures cited by the U.S. Energy Information Administration, so this is not a marginal adjustment. A Forbes analysis published in late May of this year described the Trump administration as hastening measures to spur domestic production of enriched uranium, specifically because the full ban is approaching with the waiver window closing, and because building new enrichment capacity domestically takes years that the deadline does not comfortably allow for. This is the actual context in which Canada's strategy should be read, not as an aggressive move against the United States, but as an attempt by Ottawa to position Canadian mining output as the reliable allied alternative to Russian material at exactly the moment Washington is legally required to find one. That is closer to alignment than confrontation. And there is a piece of corporate structure that makes the alignment concrete rather than abstract. Cameco, the Saskatoon-based company that is Canada's dominant uranium producer, is also, since acquiring it jointly with the investment firm Brookfield in November 2023, a co-owner of Westinghouse Electric Company, the American reactor manufacturer behind the AP1000, currently the only large-scale reactor design under active construction in the United States. In the same week that Hodgson's strategy was unveiled, on June 23, 2026, the U.S. Department of Energy's Office of Energy Dominance Financing announced up to $17.5 billion in conditional loans to finance long-lead components for 10 new AP1000 reactors at 5 American sites, a program explicitly designed to advance an executive order President Trump signed calling for 300 gigawatts of new nuclear capacity by 2050. Energy Secretary Chris Wright said in the department's release that the loans would play, in his words, an important role in reviving the supply chain needed for America to build large-scale commercial reactors again. Cameco's own statement on the announcement called it welcome news, and separately, in response to Canada's nuclear strategy, the company said on social media that with its Tier 1 uranium assets, its fuel services business, and its ownership stake across the fuel and reactor cycle, it considers itself, in its words, fundamental to Canada's nuclear energy strategy. So one useful corrective to the America reacts framing is this. The most concrete institutional reaction from the American side wasn't a rebuttal or a defensive tariff move. It was a financing commitment to a reactor program that a Canadian company partly owns and stands to profit from directly. That doesn't mean there's no friction in the U.S.-Canada uranium relationship. Historically, it's worth remembering that this isn't the first time Washington has scrutinized Canadian uranium as a potential threat to domestic industry. Back in 2018, the U.S. Department of Commerce launched a Section 232 national security investigation into whether foreign uranium imports, including from Canada, threatened American energy security. After a petition from struggling domestic producers, Cameco's chief executive at the time, Tim Gitzel, submitted formal comments arguing that Canadian uranium, supplied to American utilities for 3 decades as what he called a strategic friendly ally, did not impair U.S. national security and shouldn't face import restrictions. In July 2019, President Trump ultimately declined to impose new trade restrictions following that investigation, instead creating a nuclear fuel working group to study domestic capabilities. Gitzel welcomed that outcome and specifically praised a joint action plan on critical minerals cooperation that Trump and then Prime Minister Trudeau had committed to develop. The pattern that emerges from that earlier episode, and that appears to be repeating now, is that when the U.S. government has scrutinized foreign uranium, Canada has consistently been treated as the exception rather than the target, precisely because Ottawa and Washington both see Canadian supply as reinforcing rather than undermining American fuel security. As of this recording, there is no indication in the public record of a fresh Section 232-style action, executive order, or formal statement from the Trump administration specifically responding to, let alone opposing, Canada's June nuclear strategy. That's a real gap in the America reacts premise, and it should be stated plainly rather than papered over. The reaction implied by the headline doesn't appear to exist yet as an official U.S. government position. If one materializes, it would be a significant development worth revisiting, but it hadn't as of this recording. Where the relationship gets more genuinely complicated and more interesting than a simple rivalry narrative is in the enrichment gap itself, which remains a real dependency running in the opposite direction from what the headline implies. Because Canada's CANDU fleet has never needed enriched uranium, the country never built domestic enrichment infrastructure. As a piece published by Policy Options in April explained, uranium mined and processed in Canada currently has to be exported, historically to the United States, for enrichment before it can return as fuel for the new generation of small modular reactors that Canadian utilities are now planning to deploy. That means that even as Canada expands its position as the mine-to-market supplier of raw uranium to the world, it remains structurally reliant on American or other allied enrichment capacity to convert any of that material into fuel for its own next-generation reactors. A separate analysis published by the Macdonald-Laurier Institute has argued that this dependency represents a missed strategic opportunity. Canada, France, Japan, the United Kingdom, and the United States, sometimes referred to together as the Sapporo Five, already committed in 2023 to jointly invest $4.2 billion to expand Allied enrichment and conversion capacity specifically to displace Russian material, and the Institute's analysis contends Canada is underweighting its own potential role in that expansion given its raw material advantage. Canada's new strategy acknowledges this tension without resolving it, keeping the enrichment question formally open rather than committing capital to it. That is arguably the most important sentence in the entire document for anyone trying to assess whether Canada has genuinely changed the balance of power in the fuel cycle. It has not yet decided to build the piece of the puzzle that would actually reduce its dependency on the United States and other established enrichers. What it has decided to do is double down on the piece of the puzzle it already dominates. A research report published by RBC Economics under the title Atomic Advantage adds another layer worth flagging here because it quantifies just how exposed the American reactor fleet still is. According to figures the bank cites from the U.S. Energy Information Administration, roughly 20% of the enriched uranium used in American reactors came from Russia as recently as 2024, which is the vulnerability the Prohibiting Russian Uranium Imports Act was written to close. The same RBC analysis notes that Canada already holds about 18% of global uranium conversion capacity, the intermediate industrial step that turns mined uranium concentrate into the gas form required before enrichment can happen, which is a meaningfully large share of a part of the supply chain that gets far less attention than mining or enrichment themselves. RBC's framing is that Canada's uranium deposits and its existing conversion expertise together anchor Allied nuclear fuel security in North America and abroad. language that reads as aspirational corporate strategy commentary rather than settled fact, but it does illustrate why Bay Street analysts and not just Ottawa policymakers are treating this as a structural opportunity rather than a one-off news cycle. It's also worth being precise about where Canada sits globally rather than accepting the change the game framing at face value. Kazakhstan, through its state uranium company Kazatomprom, remains the world's single largest producer by a wide margin, supplying roughly 40% of global mined uranium in recent years. Canada's strategy doesn't claim to overtake Kazakhstan, and none of the sourcing behind this script suggests that's realistic in the near term. What Canada is claiming more narrowly and more credibly is leadership among suppliers that Western utilities currently regard as politically reliable, which is a different and considerably more achievable claim than global market dominance. Layer onto this the fact that the uranium market itself has been unusually volatile this year for reasons that have nothing directly to do with Canada's strategy. Spot uranium prices climbed from just over $80 a pound at the start of 2026 to a year-to-date high above $101 by January 29th, according to data compiled by the Investing News Network, driven by rising nuclear demand projections worldwide. That rally proved fragile, as investors rotated toward safe haven assets amid escalating geopolitical instability. Spot prices fell nearly 16% in a single week in early February, and then came under renewed pressure in March when the outbreak of war in Iran disrupted shipping through the Strait of Hormuz and triggered a broader global energy crisis, leaving the spot price to settle around $84 a pound by the end of the first quarter. John Ciampaglia, chief executive of Sprott Asset Management, told a Bloor Street Capital virtual uranium conference around that time that the longer-term fundamentals of the market remained, in his assessment, very much intact, even as short-term sentiment whipsawed on events entirely unrelated to North American nuclear policy. The point here is one this production tries to make consistently. Don't let a single national strategy document get credited or blamed for market dynamics that are actually being driven by a war in the Middle East and by broader safe haven investor behavior. Canada's strategy is a long-horizon industrial policy document with targets set out to 2032, 2035, and 2040. It is not, on its own, a price-moving event, and treating it as one overstates its immediate market impact, even as it correctly signals a genuine multi-year shift in supply chain politics. It's also worth widening the lens beyond the U.S.-Canada relationship entirely, because part of what the new strategy signals is that Canada is not treating uranium primarily as a bilateral American story at all. In March of this year, during Prime Minister Mark Carney's first official visit to India, the first by a Canadian Prime Minister since 2018, Cameco signed a 9-year, roughly $2.6 billion Canadian dollar supply agreement with India's Department of Atomic Energy, committing to deliver 22 million pounds of uranium concentrate between 2027 and 2035. The deal was formalized in New Delhi with Cameco Chief Executive Tim Gitzel, Indian Prime Minister Narendra Modi, Carney, and Saskatchewan Premier Scott Moe all present, and it forms part of a newly announced Canada-India Strategic Energy Partnership that also covers liquefied natural gas, critical minerals, solar, and hydrogen cooperation. India currently operates 24 nuclear reactors and has set a target of 100 gigawatts of nuclear capacity by 2047 as part of its nuclear energy mission for Viksit Bharat. So this is a genuinely large future customer, not a symbolic gesture. Gitzel, at the signing, connected the deal explicitly to broader market dynamics, framing rising global nuclear demand as the underlying driver. Domestically, the deal wasn't received with universal enthusiasm. Saskatchewan's opposition, NDP leader, Carla Beck, noted afterward that while the uranium agreement sounded positive on its face, she felt more needed to be resolved on unrelated trade files, specifically tariffs on P exports, suggesting that even inside Canada, nuclear diplomacy successes are being weighed against other unresolved trade friction rather than treated in isolation. The broader pattern that emerges from India and from Canada's existing role as the EU's largest uranium supplier is that Ottawa is deliberately diversifying its customer base for uranium at the same time it's expanding production rather than betting everything on a single American relationship. That diversification is arguably a more accurate description of what changed than any specific confrontation with Washington. None of this happens in a vacuum inside Canada either. Cameco was not the only institutional voice welcoming the strategy. Fred Dermarkar, President and Chief Executive of Atomic Energy of Canada Limited, the Crown Corporation that holds the CANDU intellectual property on the government's behalf, called it a pivotal moment for the country. Ian Edwards, head of Atkins Realis, the sole licensee of CANDU technology, and the company developing the newer Monarch reactor design with the help of a federal loan of up to 304 million Canadian dollars, said the strategy reflected, in his words, the ambition and vision Canada's nuclear industry deserves. Those are admittedly statements from companies that stand to benefit directly from federal support, so they should be read as interested parties rather than neutral referees, but they do indicate that the domestic nuclear industry sees the strategy as a genuine escalation of federal commitment rather than a rebranding exercise. The strategy also sets export ambitions that go beyond uranium raw material entirely, aiming to win at least 4 new international markets for CANDU reactor technology by 2040 and to engage between 6 and 10 new nuclear entrant countries over a 15-year horizon, building on existing CANDU projects such as Romania's planned new build and refurbishment program. That's a reminder that uranium mining is only one layer of what Canada is trying to build. The government's stated ambition is to sell reactor technology and fuel cycle services together, positioning Canada as what Hodgson called a supplier of choice across the entire nuclear value chain, not simply a mine. One more dimension of the strategy is worth mentioning briefly because it tends to get lost entirely in coverage that focuses only on reactor fuel. Canada is also trying to reclaim ground in medical isotopes, a related but distinct corner of the nuclear economy. The strategy document notes that the global market for nuclear medicine isotopes was valued at $12.6 billion in 2023 and was projected to keep growing at roughly 15% annually through 2026. And it acknowledges that despite being a historical leader in isotope production, Canada currently captures only a fraction of that value because higher value processing and packaging largely happen offshore. The government has attached a companion radioisotope strategy to the broader nuclear plan, aiming to grow Canada's share of that global market by at least 10%. It's a smaller story than uranium mining in dollar terms, but it reinforces the same underlying thesis running through the entire document. Canada has repeatedly built up an early or dominant position in a nuclear-adjacent resource or capability, then watched more of the downstream value get captured elsewhere, and this strategy is explicitly trying to break that pattern across several fronts simultaneously rather than just one. There are also concrete institutional checkpoints built into the strategy that are worth watching over the next 2 years, precisely because they will tell us far more about whether any of this is real than the initial headline did. The review of uranium mining investment policy is due by 2027, and how Ottawa handles foreign, including Chinese, investment interest in Saskatchewan properties during that review will be a genuine signal of how strategically Canada intends to treat the sector going forward. A draft federal financing policy for new nuclear projects, covering instruments like green bonds, Canada Infrastructure Bank participation, and loan guarantees, is due from the Departments of Finance and Natural Resources Canada by April 2027. And the strategy's own credibility benchmark, the 2032 target for securing domestic fuel supply chains, sits roughly 6 years out, which is long enough that a change in government in Washington's trade posture or in the broader nuclear investment cycle could plausibly alter the trajectory well before that date arrives. None of that is a reason to dismiss the strategy, but it is a reason to treat June 23, 2026 as the start of an implementation period to keep watching rather than as the finish line the headline implies. So where does that leave the two halves of the original claim? On the first half, whether Canada has changed the global uranium game, There is a real, substantiated case that Canada is consolidating and formalizing a position it has been building for several years, turning a natural resource advantage, reinforced by the EU's post-invasion pivot away from Russian material, and by the pending U.S. legal deadline for eliminating Russian-enriched uranium entirely, into a stated national strategy with dated targets through 2032, 2035, and 2040. That is meaningful, but it's an acceleration and formalization of an existing trajectory, not the sudden reshuffling of a market that the phrase "change the game" implies, and it notably stops short of addressing the enrichment gap that remains the more strategically consequential piece of the fuel cycle. On the second half, whether America is reacting, the clearest, most concrete American response identifiable in the current record is financial and structural rather than adversarial, running through a Cameco-linked company, Westinghouse, receiving federal loan support for reactor construction in the same week Canada's strategy was released, and through a decade-long legislative and regulatory push to replace Russian material with allied supply that Canada is positioned to help fulfill. There is no confirmed formal U.S. government statement, investigation, or policy response specifically directed at Canada's new nuclear strategy as of this recording, and any account suggesting otherwise should be treated with real skepticism until an official source says so on the record. What's actually unfolding is less a duel than a slow, uneven alignment of interests between two governments that both have reasons for now to want the same outcome: less Russian material in the Western nuclear fuel supply and more of it coming from Saskatchewan.